Hi traders, Nick Shaheen here, looking at GLD, Gold, Spider, and we looked at it last on the 30th of December, so somewhere around here, and we said worth a shot on the long side because of the fact that it's got lower highs, but knocking on a floor, and the floor comes from multiple years. So this is the area it broke out, came back to it, came back to it, came back to it from lower highs. So coming to a pinpoint in December, right here-ish. So from here, it needs to make up its mind, break down or break out. Okay, so if you were to, I said if you were to, put a gun to my head, first of all, I think it's a rigged market, somewhat. And if you put a gun to my head, I wanted to go long it at that time, and I said a debit call spread should pay. And I mentioned a couple of levels, and I put those red levels right there, and I said I won't wait until the level breaks. I will gamble on it right then and there. So long. Why? Because I've read several places that gold, all the gold that's ever been mined in the history of mankind, or humankind I should say, can fit in 2 swimming pools. And if that's the case, something this rare should never go down in price. Even if it ran up too fast, it should retrace a little bit but then continue on. So over the long term, I expect to see this overall, not this. So that's why I went along. So zooming in back to 1 year. Okay, so the breakout happened like we said it would at this level, gapped up massively with the help of extenuating circumstances. Regardless, it did happen, and emphatically broke this one with today's candle, another leap up. And now it touches this box which I just drew, and it's a box telling me that this is another area of contention. Why? It spent a lot of time fighting this level. This right here, I call it a transition, overshoot, whatever you want to call it, to actually end up in this area right here where it seemed like price persisted a lot longer. Ignore this, ignore that, these two wash each other out for whatever happened here. And then suddenly right here, everybody hated gold again, GLD straight down. You can extend this out and still say that it respected it somewhat even during the October correction, the recent one we've had. So what now? This is a broadening wedge, I guess, and 1, 2, 3 touches. Isn't that the theory? The third touch, you buy a breakout. So I won't, if I'm long it already and I'm up big, I would cash out and call it a win, and then I can re-engage higher cheaper. So yes, if I still believe in the breakout, but I don't want to put my profits at risk, cash out the profits and re-engage cheaper is what I would do with the profits. This is an important level. The next couple of bucks are important because this is an area of contention with specific points. This is one, so that is 124.5. Okay, so that is 1 point. And that is a gap area, so it's of importance. Yes, it's been filled, but it played last time. It's also an area from which it broke out emphatically, and it bounced emphatically. 1, 2, 3, failed emphatically for a short period of time, and then bounced up again. So this area right here is very important, and it might be making its way back into it. So if that's the case, I can ride the long play higher, but why risk the profits? I booked some profits on this gift of up 1.6 today, and re-engage higher cheaper. So play with the house's money, enjoy the profits, and if so compelled, you can re-engage higher cheaper. This is my take on gold.